Everyone, me, Kevin here. It's time to have a realistic conversation about a Tesla stock. Let's make it clear. We've all seen headlines about price target revisions at big companies like JP Morgan or delivery estimates. None of that, I think, is really core to the long-term vision of Tesla, mostly because I think we've all come to realize at this point, when a stock goes up, the price targets magically follow the stock up. And when a stock goes down, the inverse happens. So usually, I think price targets aren't worth paying attention to. I think what's more worth paying attention to is sort of longer-term outlooks from analysts. And right now, longer-term outlooks, at least on an average from Wall Street, are that Tesla is going to grow earnings per share somewhere around 30% per year on an EPS growth basis, which is great. This is fantastic growth. It's not that 50% from years back, but 30% is still pretty good going forward. It actually puts Tesla at around $225 per share. It puts them at right around a 2.6 peg, in case you're ever looking at those price to earnings growth measures. I usually like 2.6 as a software peg, where a more manufacturing peg, I like to go with around a 1.6, which unfortunately puts Tesla a little bit closer to that 135 to 140 range. Now, that doesn't mean Tesla stock needs to go down to this range, but what it does mean is if analysts look at Tesla as a manufacturing company, one way we can actually increase this here is by increasing the earnings per share of Tesla in the near term. And if Wall Street wants to value Tesla as a software company, which obviously we know it's a fantastic artificial intelligence play, then we'd have even more earnings to base a higher multiple off of, which would be great for Tesla's valuation. So both of these numbers could be substantially higher with more earnings. And that's actually what I'd like to focus on in this video. If somebody asked me, Kevin, what would you do? And I'm not applying for the job. I got plenty going on with House Hack. In fact, I think having less on my plate is very important as a CEO. I've personally found that if you have too many irons in the fire, you might not be paying as much attention as you should to your core business, which isn't great. And some of that could be happening with Elon. So that's why I wanted to put this video together of what would I do if I were solely the CEO of Tesla. And the first thing that I would do is I would think of, well, what are we really good at? And where are we making a lot of money? And the first answer to that is mass production. And I would love to mass produce more vehicles. Now, obviously, we're somewhat demand limited right now. We've got plenty of capacity and plenty of expansion capability at our existing gigafactories to produce many more vehicles. Unfortunately, I don't think mass production is really being highlighted right now, mostly because Elon believes, why manufacture a Model 2 or a $25,000 vehicle? Why bother? The future is autonomous. Well, I don't disagree that the future is autonomous. I just disagree in the timing. And I think you actually arm yourself to be more prepared for an autonomous future by, on behalf of Tesla, making as much money as Tesla can right now to make the necessary investments to get all the way to autonomy. Now, how do you do that? Well, in my opinion, you should launch what I call the Tesla Model 2.5. And the Model 2.5 is really a pared down Model 3. And that way you don't have to rebuild sort of a design of a vehicle, but instead what you're doing is you're going with a smaller battery pack, you still have a four-door vehicle, and you're trying to get that price point to $25,000, and you're going to include FSD as standard. Now that sounds wild. Well, there are incredible margins on FSD, and there are incredible margins on selling larger battery packs. And we know that with tariff warfare and input costs, some things are more expensive today, though fortunately lithium prices have fallen off of a cliff. But what happens here is you create, finally, the growth story for that manufacturing peg again at Tesla. It creates a strong fundamental foundation for not only the stock, but also the brand, as a brand that's growing and not stagnating, a brand that has sales growth. People are nervous about newish car companies. Tesla's still newer. I mean, it's been around for a while, but certainly not the legacy age of Ford or GM. But one of the benefits of growth is people don't have this fear over, oh my goodness, what if the company goes bankrupt? Quite literally, somebody asked me the other day, hey, I own a Rivian. If they go bankrupt, who's going to take care of the service for my car? And I'm like, okay, hold on. we're a few steps ahead here. We're not close to that yet. Obviously, Rivian, we could talk about their fundamental analysis and their balance sheet issues separately. But the point of that is this is in folks' minds. So when you grow the company, you imply the brand has pricing power. Even if the margins may only be, let's say the margins are 10% at this level. We'll put them in at 10% margin. Yes, the margins are lower. But what we'd be able to do is actually pick up more of the remaining EV tax credits that are available. Yeah, we expect a lot of those might go away, but they haven't gone away yet. Trump's tax plan isn't here yet. So milk as many of those EV tax credits as you can. You don't have to retool the entire factory set. Instead, strip down the battery and maybe some other more unnecessary features. You know, strip out some of the I don't know, seat heaters or something, right? There are plenty of things that you could do to strip this down, get to a 10% margin, and sell an affordable four-door vehicle for mass production. Now, the reason you include FSD, in my opinion, is because you want all of the data you can get your hands on. That is Tesla's moat right now. Tesla is hands down the best ADAS that exists. That is the driver assistance software. It's the best that exists. There's hands down, no question. Mercedes, BMW, any of these companies don't hold a candle to Tesla. Now, the benefit of maximizing your user base now, even and expanding it even more than you've ever done before, is you keep your moat. See, a concern that I have for Tesla is that Tesla used to probably have something like a 5-year moat, and I think that moat is starting to shrink. If we look at Chinese manufacturers like a BYD with their 5-minute quick charge or their ADAS technology, they're actually already getting pretty dang close to what Tesla's doing. But in terms of American manufacturers, a lot of them are probably going to have to rely on an NVIDIA Drive platform, and I think that's still going to take a few years of real neural network development to get them close to Tesla. So Tesla still has a lead, but unfortunately that lead is narrowing. I would argue that Tesla used to have a 5-year lead, and we're probably down to about a 2-year lead right now. And one of the reasons I think that lead is shrinking is because we're focusing less on getting FSD in the hands of more people. We're focusing less on getting more Tesla vehicles and the Tesla brand into the hands of more people. And instead, I'm not entirely sure what the focus is. Now, I know that might sound wild because obviously Elon Musk told us, oh, well, Cybercab and Optimus, great, but we can do both. See, that's what blows my mind. The R&D side of Tesla, just like any company, the R&D side of the company can continue full speed ahead, or full steam ahead, if you will. We could still manufacture or begin manufacturing cybercabs and perfecting our full self-driving technology for cybercabs, while at the same time expanding the brand in a positive and an affordable way, getting FSD into the hands of more people, and promoting the mission that Tesla stands for, which is a cleaner energy future with higher MPG on, if you adjust towards gasoline, the miles per gallon you're getting on a Tesla is substantially better at an affordable price with the safety, so saving human lives. This is the core mission of Tesla. If Tesla leaned into the core mission here, and we actually got to growth again, where we were now showing, hey, look, yes, we're maybe selling the vehicles at a lower margin, but look, we're growing. 1.8 million vehicles, easy. We're now at 2.4. We're now at 2.8. We're now at 3.4. Oh, by the way, R&D is almost done with the Cybercab. By the way, we're now cranking on the semi-truck. How long has the semi-truck been delayed? We finally started to build the shell of the Cyber semi-truck. We finally started to build the shell of the semi-truck facility. But as far as we can tell, that's just the shell. We still don't actually know if the semi-truck is going to be capable of real load hauling, especially in colder climates. We don't know that yet. We have hope, but we don't know that yet. What we do know is that Tesla can mass manufacture cheaper cars and save lives and support a sustainable future. And this is what Tesla should double down on, while expanding their FSD moat for at least their hardware that's currently in vehicles. We know that hardware 3 is likely going to have to get upgraded to hardware 4 at a cost for Tesla. Now, Elon actually suggests it's a good thing that so many people didn't upgrade to full self-driving under hardware 3, because he acknowledges Tesla's going to have to foot the bill for those computer upgrades. But when is that going to happen, right? We've seen the Roadster that was promised, 7 years ago, and we still haven't seen those deliveries, but that's okay. That's not our mass market vehicle. Focus on what Tesla's good at, inexpensive manufacturing. Now, what about the other benefits or the upshots of Optimus and robotaxis and the relationship with Trump? Well, unfortunately, each of these three items is what I call a hope factor. That's not to say that I'm bearish on any of these three factors. It's just not core to what matters for Tesla's actual valuation right now, which is a multiple of earnings per share. It's very difficult right now to factor in how much money is robotaxi going to make. Not only because we have the competitive elements of Amazon Zoox getting closer. In fact, they're doing robotaxi rides right now in San Francisco. Mind you, that probably has zero hope built into the Amazon valuation. It's actually a brilliant Trojan horse if you need exposure to robotaxis without it being Tesla, Amazon. I don't think there's a single analyst pricing in a dime of robotaxi revenue for Amazon, and they're actually doing self-driving rides right now in San Francisco. Now, that's not to say that they'll be as scalable as Tesla. I think Tesla has a lot of advantages. My simple argument is, while we are focusing on the R&D future, right? You've got the I should do it like that. There you go, R&D future. While you focus on this future, which is built on Optimus, potential lower taxation or more conducive business regulation for Tesla, which I don't really know that Tesla needs a lot more regulatory support. I actually think NHTSA has been, in many examples, actually relatively reasonable to Tesla. My favorite was when they were investigating Elon mode, where they took away the nag. And rather than getting Elon in trouble, they sent him a letter and said, hey, what did you learn from not having the nag where you have to touch the steering wheel? I've always maintained that I thought it was unsafe that you have to wobble the steering wheel or put pressure in one direction on the steering wheel while you're driving on the highway just to tell it you're there, just because of the risk of accidental disengagements. Whereas the no nag feature and now the pay attention feature, I think, is much safer. And I think that was done in partnership, basically, with regulators. So I don't think regulators are all bad. I don't know how much regulation you really need to open up for Tesla. The Optimus future, and then, of course, the robotaxi future, folks say, hey, well, robotaxis, that's where you need the regulatory support. But do you? The robotaxi support is already in existence in places like Texas or California, where self-driving is a potential already. So I don't know that you need that much more regulatory support while you prove a concept. The states are already providing that support. So on one hand, you have this, and then on the other hand, what you really should do is prop up as much as possible your manufacturing. Unfortunately, I think that Elon is distracted with his vision of the future, which I agree is a great vision, but it is not one that is near-term useful to the Tesla mission. Because you could do both of these, and that's what confuses me. With $20 billion of free cash, why are we not tripling down on manufacturing the cheaper model that was promised rather than just cheaper variants? They heavily implied that there would be a new model. Now we have cheaper variants, and I understand my argument is here, fine, if we're going to go with the cheaper variant model, then let's do it. Let's get a smaller battery pack. Let's strip what we can. Let's get to the $25,000 car, and why don't we deliver what we promised, especially in the face of plummeting lithium battery pack prices. Anyway, so one argument that you do, you go all in on manufacturing, while at the same time you don't take away from the robotaxi dev and the Optimus development. But the other thing that we have to consider in the valuation over the last 3 to 4 months is we've had a lot of hope. The Trump trade, the robotaxi trade, the Optimus trade. We actually need to start showcasing and delivering the product. So let's deliver more earnings here, but let's now showcase what Optimus is actually functionally doing within Tesla. Now we see snippets and videos like the Optimus catching a ball or sort of moving, items in and out of a box. But we want to see some real use cases. I want to start seeing some Optimus robots unloading a truck, walking from the truck and bringing, boxes with actual product in it. And this, I think, creates a reasonable way for analysts to go, okay, now we could start valuing this. See, it's cool when you see Optimus catch a ball, but catching a ball doesn't make money. What makes money is freight, unloading, doing something. And now analysts, especially with the help of Tesla, Tesla could say, look, we're saving X many man hours or whatever. That could be calculated into an earnings per share projection, which is hard to do today, but then it actually supports the stock, supports the brand. It's a little cutoff that just says EPS here. The same thing with robotaxis. Where do we sit right now on oh, there's Lauren. On the other hand, something that you could be doing with the robotaxi is showing robotaxis potentially bringing people from parking lots to the front of the facility. Start showing some more use cases of how we're actually using the robotaxis. Now, Tesla did do this in one aspect where we saw Tesla sort of self-driving themselves from the factory to the port, if you will. It'd be nice to see more of this, of people getting in and engaging with the vehicle. And I think that's all going to come. We know this is part of the R&D future. So I think from a marketing point of view, those things would help. But by and large, one of the largest or most important things that Tesla could do right now is get politics out of its life. That's going to be very difficult. See, Tesla has such a wonderful team of designers and engineers and researchers and workers. Tesla did a smart thing a few years ago where they showcased the entire team, the panel of workers at Tesla that were leading the company. Unfortunately, many of whom aren't at Tesla anymore, or many of whom who have also sold quite a bit of the stock. I think it would be wise to showcase that team again, and potentially for Elon, at least temporarily, assign sort of an interim CEO to the company and let somebody else run Tesla and actually focus on Tesla full time. So I would argue that an interim CEO would help distance some of this political hate that Tesla gets from Tesla and separate Elon for a moment, while actually having somebody who can then fully focus on, you know what, we do need to focus on a Model 2 and some more scale. We do need to at the same time focus on scaling up our manufacturing, focus on showing what we're doing in the research and development side, and actually utilizing the cash we have available. If we have all of this cash to expand production in America, well, what are the plans to start doing that? Let's do it. Are we going to double the size of Giga Texas, or do we have too many foundation issues at the factory over there? Literally, because of where they built it. Topic probably for a different video. And do we, start an Ohio or Detroit facility where now all of a sudden we could compete in the location and take advantage of some of the supply chains that exist in those regions for manufacturing Teslas. Manufacturing build-out in conjunction with a lower cost model while showcasing some of the advances that we're not seeing right now on a regular basis for the future, along with an interim CEO, I think are the most critical next steps for Tesla. In the meantime, Tesla's probably going to face hardship, mostly because Tesla in a portfolio today is a defined support of Elon Musk. This means, unfortunately, some fund managers have to remove Tesla from people's portfolios because of the relationship to Elon Musk. I think an interim CEO could at least help with some of this. And really, I don't think anybody questions or like people are trying to vandalize Starlink's. We do see Starlink contracts getting canceled, but it's not like they're looking to vandalize Starlinks or vandalize rocket ships, mostly because I think that with SpaceX, Elon has enough distanced himself where the company almost looks and feels like it's running itself. It's not like we're getting these public earnings calls on a regular basis, to where I think that same, at least separate feeling, obviously he holds Starlink and SpaceX events, or he'll go to the launches, but there's enough of a distance between SpaceX and the Starlink product and Elon that you have less hate towards what they're doing, especially now this, picking up our astronauts at the space station, which is incredible technologies. Catching the sort of Mars rocket. I mean, these things are amazing, right? But there's enough of a distance between Elon and SpaceX. SpaceX doesn't seem to be as much of a victim as Tesla is. And I think that's mostly because Elon is living mostly at Doge in the White House. And then when it comes to caring about Tesla, all we really get focus on is the future of robotaxi and how close the cybercab is. But if this is what we're hinging the future of the company on, which is what Elon tells us, right? Don't invest in Tesla stock unless you think full self-driving is going to be a 100% success. Well, then there shouldn't be a surprise that as we get less of our CEO and less or fewer robotaxi updates, that all of a sudden all we have left to look at are deliveries, and we didn't get a promised lower cost car. We're barely getting some refreshes to variants, and we're not really getting what was promised. And so it's no surprise the stock is selling down. Now, in a recessionary environment, all stocks are going to go down, almost certainly. So we don't really need to consider that aspect right now. Although I do think if we had a recession now, Tesla would be less recession resilient than ever before, mostly because if we did have a recession in 2022, your white-collar workers had plenty of cash and jobs available to keep buying Teslas and affording Teslas. Rates were also still lower for the first half of 2022. Today, the opposite is true. There's a lack of available white-collar work, and people who are switching jobs are starting to take significant pay cuts versus what they were making before just to have work. And so this could make Tesla a little bit more sensitive, again, because we're still catering to that higher income audience, where I do think there are opportunities to cater to a lower income audience. One thing that Tesla is doing, obviously, is they're subsidizing lease rates and interest rates now with the 0% APR and all this. But ultimately, people are still smart. They look at that sticker price and they realize, hey, why am I going to pay $35,000 or $33,000 or whatever it is for a car when I can get a $25,000 car or even a $22,000 car like a Toyota Camry? I think they're somewhere around $24K now, and not have the potential brand issues or the vandalism issues that you get with the Tesla at the moment, while at the same time you actively have a CEO who's saying, hey, the future is robotaxi. We're basically going to focus less on our manufacturing side. That seems to make me a little less interested in wanting to buy a Tesla, and I think that could affect other folks as well, because you may as well wait for the robotaxi cybercab. My take there. Now, as far as the potential of us being able to loop our vehicles into sort of the robotaxi fleet, unfortunately, I think that's a very long time away. In fact, I would argue that robotaxis are a very long time away as well. And that's why I think it's so important to triple down on manufacturing with the excess cash you have. Subsidize those margins a little bit and take market share. Mostly because my belief is we probably won't actually see like Tesla robotaxis where we're able to sort of invest in vehicles and throw them into the fleet until at least the 2030s. I hate to say it because it sounds bearish, but I have this mindset that whether we do or don't, there's a chance of going through a recession between the next 4 to 5 years that will slow investment and capital expenditures. We also still haven't gotten to the phase yet which is still a very painful phase that you have to go through, where the robotaxis are good, but they're not perfect, and then they accidentally cause an accident or they kill someone. You're just going to get set back years in a regulatory environment. Trump's only going to be here until 2028, and if people are dying, then even Trump can't save the day with regulation. Come January 2029, somebody could crimp down those regulations again. So I still think there's quite a bit of a way to go to get to a robotaxi future, and I just don't see it until the 2030s. And that's where I look and say, do we really want to be stagnant on the manufacturing side at 0% growth or potentially negative growth for the next 5 years when we could be taking market share? We have the margin. We have the best ADAS technology in the world. Why not make Tesla great again?